Hello and welcome. You are watching Business Plus here on News 9 Live. I'm Krishna Kumar and joining me in the studio is my colleague and friend Suyash Maheshwari. And as always, we begin the afternoon edition of Business Plus with a roundup of the day's trading session. India's stock markets is where all the focus. Bear in mind, lots of news for the stock markets to digest, including the latest escalation of the conflict in the west of Asia. It did take a beating yesterday. Let's understand what happened in the day's trading session. How did markets fare for the day? Suyash, talk to us. Yes, it's been more than 24 hours, but 48 hours since the escalation of the conflict. How did the markets digest that news today?
So Krishna, the markets have been buoyant since the last couple of days, and we have seen a rebound across the globe where we saw a 0.5% rally in US markets. In fact, the European markets also posted strong gains in yesterday's session, adding and building on to in today's session as well. And Nifty, as a matter of fact, has managed to erase all the losses that came after the war news broke out and the correction that we saw on Monday. So Nifty has not only regained all the losses, lost ground after the war news broke out, but it has also managed to add on to it. Now Nifty is currently on a 2-day winning run. The index managed to hold on to the morning gains, and we are seeing buying interest across all sectors except PSU Banks, which are seeing some sort of a profit booking, and IT space, which was a little bit jittery ahead of the earnings results. And we are also seeing participation from index heavyweights like HDFC Bank, like Reliance Industries, which were missing in the run up to that 20,200 sort of levels. Now Nifty today managed to scale the 19,800 levels once again. The index ended about 120 points higher, almost more than 0.5% higher at 19,811 levels, whereas Sensex gained about 400 points and managed to close just shy of the 66,500 mark. Now the broader markets also moved in line with the headliners. The broader markets, I mean Nifty small cap index was up around 0.8%, whereas the mid cap index gained about 0.5%. We also saw a decline in volatility as India VIX dropped by about 2.5%. This all augurs well for the bulls.
Right. I started with the question, Suyash, about how is the market digesting all that volatility and the war, two wars that are happening simultaneously. But looks like nothing is perturbing Indian markets. The buoyancy continues. It was a bit of a hit on Monday morning because it was a knee-jerk reaction. But come Tuesday evening, Wednesday, by Wednesday you're sorted. The markets continue to be on the same path that it was before. We have Mr. Aamar Deo, Head Advisory, Angel One Limited, now joining us live on the broadcast. Aamar, thank you so much for taking time out to be with us here on Business Plus, the afternoon edition. Talk to us, markets momentum continuing as Suyash is talking to us clearly. That escalation in the Israel-Palestine conflict not really affecting the Indian markets for too long, apart from the initial knee-jerk reaction.
Yeah, I would say that that definitely is a sign of confidence, and as we've been seeing is that across the globe, the markets did witness some negative reaction initially, but then that was overcome. And talking about our markets, we saw the Nifty bounce back significantly because earlier we were looking at the 19,200, 300 zone as a very strong support zone technically also. And from there only, those levels around 300, 350, 19,350 levels, we witnessed a pullback. And Nifty significantly up. And also, if you look at the broader other indicators in terms of advanced decline, that also remains favorable for the bears, for the bulls. And also, if you look at the India VIX, because India VIX also at times under such circumstances where you rightly said that two wars are going on, one the recent one. So that also has not inched up significantly. It's below the 11 mark. So that also clearly tells us that investors at large are not as duly concerned. But yeah, one point I would like to add here is that crude oil prices have spiked because of this. So how long crude oil prices remain at elevated levels, that's something that we'll need to see. Yeah, crude oil prices from the recent highs have corrected, but what we see is that last couple of days, from the lows, it has bounced back. So we'll have to see whether crude oil prices retain at the current levels, or we see some sort of, because that would have an impact on energy prices, ultimately leading to the inflationary trends. So in a nutshell, I would say that overall this bounce back was, I would say, definitely, I would not say exactly on expected lines, but some of the technical indicators were clearly pointing that there is a strong support at lower levels. And also, if you look at the derivatives data, so there also we've seen some long build-up happening and short covering. So there is not much short build-up happening. So that also is a positive sign to say.
All right, so positive signs, and Suyash, what a time to have positive signs, isn't it? The world is dealing with so many negative signs, but something about the Indian markets that is, keeping it strong. Also, we were talking about consolidation in the Indian market before the Israel-Palestine escalation broke out. So, in that sense, is it markets finding its lower levels and consolidating better with all the volatility around?
I mean, that seems to be the case, Krishna, because if you look back, the market action in the last 1 month or so, primary action was driven by the global cues that we were getting. The bond yields were around the 4.7, 4.8% mark at a 16-year high. The crude prices had surged to about, $97 a barrel mark. Now, crude, talking about crude, Amar said that, it remains a pain point for the market, but crude prices are still, $9 below the kind of levels we were seeing. Yes, they have bounced back from the $84 low that, we saw last week, but they are still considerably below that $97 peak that we had witnessed recently. Also, the dollar index was a pain point. Now, it seems that the focus is once again shifting to domestic cues as we have earnings trickling in, the Q2 earnings trickling in starting from this week itself with IT Pack reporting the earnings. So overall the momentum will be dictated by how the global cues and the earnings season evolves over the next couple of months.
Earnings season, definitely very important cue to watch out for the markets. But the way the markets are right now, again, it's going to be all about individual stocks and stocks that are moving on the basis of news, isn't it?
Yes, Krishna, exactly. It will be about individual stocks and sectors specifically that we are because we are heading into the earnings season, and that's what will drive the market momentum. In fact, I want to come back to you, Amar. Last time in the Q1 results, the Indian markets were able to scale the July highs, which were the record highs of about 19,990 levels. Do you expect Nifty to make a dash at 20K in this earnings season as well?
Yeah, I would say that overall earnings season is expected to remain strong given the past trend. So, and Nifty is currently around 19,800. So, what we've seen is that despite the negative news flows, the market is holding up, and that also we are seeing a broad base. So, in terms of sectors, in terms of the advanced decline ratio, in terms of India VIX, so that really tells me that the trend remains positive. However, on the upside, I would say technically, if you ask me, somewhere around the previous, if you recall, the previous all-time high was just at below the 20,000 mark. So that's a level, and that's also a psychological level. So yeah, that levels Nifty could definitely look at breaching or touching it in the recent times to come.
All right. Stay with us, Amar. Let's then quickly look at those sectors that were just flashing as we were speaking. All sectors in the green, barring a couple of them, Suyash. One is the Nifty PSU Bank pack, which is down nearly 1% for the day. And then you have the Nifty IT pack in the red, but like flattish close for the Nifty IT pack. But every other pack, FMCG, they were doing so well in the recent past, continue to do well today. Auto doing well, private banks doing well, but not exactly PSU Banks, Suyash.
Yes, I think as far as banks are concerned, we are seeing some sort of convergence in the performance of private banks and PSU banks. And in fact, if you look at the past couple of weeks, Krishna, the rally in the PSU banking index had seemingly fizzled out. We were seeing corrections of about 3% and 4%, in the last 5-6 sessions or so. So it seems that, there is some sort of a convergence taking place where, Nifty bank, the private banks are now, coming into the limelight. We saw a good movement in in HDFC Bank also today. You know, HDFC Bank was up almost 1% in today's trading session. In fact, if you look at Nifty Bank, you know, on Monday fell below that 44,000 levels, which was its lowest levels in over a month. But today we have seen a good, not only a good recovery, but the index has you know, managed to scale past that 44,500 mark, which was seen as a crucial long-term support for the index. So all in all, the banking, as far as the banking space goes, it seems that the focus is shifting towards the private banks from the PSU banks.
Is it also because the PSU bank stocks have run up quite a bit in the recent past and there is consolidation mode happening over there?
I mean, definitely, like we see returns across the, you know, the smaller banks, especially in the mid-cap PSU banks. We have seen a good bit of run up. Some of the stocks have turned multi-bagger in a span of few years, Krishna. Whereas, you know, some larger banks like SBI have not really participated in the rally, and private banks have been under pressure. And you know, talking to experts like Amar, it seems that valuations are looking cheap. Amar, so Amar, like overall...
Good point, Amar. Yeah. I want to carry off on that what Suraj is talking about. Something about PSU banks, PSU mid-cap banks doing well. Large banks, especially in the private sector, we all know what happened with the HDFC stock post the merger. So large private bank stocks not doing well, but still enough value in public sector banks, specifically speaking, mid and small banks.
If you look at the public sector banks, you rightly said that we witnessed some multi-baggers taking place. And also we need to remember that if we go back in time and see some of these banks, like for example, if I'm talking about Central Bank of India. So we see that it has rallied significantly. It means more than doubled since June this year. But if we go back and see, the stock was at a point of time trading as high as 200. Currently it's around 48.50. So we need to look at it from that perspective as well. So that will give us a better idea. Be it Indian Bank. If I look at Indian Bank, so Indian Bank is one bank which is trading at record highs. So it corrected significantly, and then from almost 40 odd levels, it's around 40-45 levels. It's currently around 400 odd levels. So there it seems that the trend is different. So it's not only that the small PSU banks are behaving the same. Some of the banks have really performed exceedingly well. Like Indian Bank is definitely one of them in terms of performance. If I look at the other bank, like for example, Indian Overseas Bank. If you look at this bank has also done quite well over the last 6 months. I would say roughly around 4 months, it has more than doubled. But if I go back in time, so the stock was, this bank was trading at around 200 plus levels. Currently it's around 44. So some of the banks, PSU banks, are trading at record highs, but many of them, in spite of the significant rallies, they are still trading at 1/4, 1/5 of their all-time highs. So that speaks about the specific banks as well, as to what's going right for them, what's not going right for some of the others.
Now, Amar, what's going on with the realty space? We have seen a very good run-up in realty stocks. In fact, you know, in 2023 alone, realty stocks have run up about 45% or so. Nifty Realty recently, yesterday, in fact, scaled a 15-year high, and a lot of stocks have also participated in that rally, such as Prestige, Sobha, DLF, Godrej Properties. What's your overall outlook on the Nifty Realty pack, and is there more upside, or all the positives have already been priced in?
Talking about the Nifty reality stocks, if I look at them, for example, to start with Brigade Enterprises, this is one which has really performed exceedingly well. Last few weeks, we've seen some sort of consolidation, but the long-term trend remains very strong. If I talk about DLF again is trading significantly higher. It has gained significantly, but if you go back in time, the stock used to trade around somewhere around 1200 levels or so. So it's trading less than 50% of where it used to trade. The technical indicators and some of the factors also are in favor of this company. If I look at Godrej Properties, again, this is one which is still trading at a significant discount to its all-time high. Overall, the trend remains strong and positive. Lodha is one which is trading close to its record highs. So what it tells me that some of the big names, they are clearly in a very strong uptrend. So that tells me that any correction would be a buying opportunity. If I look at Mahindra Lifespace, again, this is one which has been correcting. We witnessed some sort of profit booking here, but more or less Again, the levels to watch out for would be somewhere around 480 would be a level, 480, 500, where the Mahindra Life space would find support. So most of the IT stocks, and the one I would like to talk about is Prestige. This is one stock which we've seen significant rally. The stock is trading at its record highs. So some of the IT means realty stocks are trading at record highs, and the structure on the charts also, and also the fundamentals are clearly saying that the going forward, the times are going to be easy for them. Means the business should be good for them, not easy. The business should be good for them. So we'll have to watch out for that, because now what's happened is that earlier most of these many of these real estate companies were focusing only on one segment. Now they've gone into affordable housing, they've gone into all different segments. So that gives them a larger universe to serve. So that also is definitely helping them.
All right, talking about IT and IT parks, Suyash, the IT pack is something that the focus of the Indian investor is invariably one way or the other. Whether you're investing in stocks or in mutual funds, how many IT stocks do you have in your portfolio? IT pack today closing flat, lots of pressure on the IT pack, and yet lots of hope on the IT pack as well, isn't it, Suyash?
Yes, we had seen a good bit of run up in the last 1 month or so, but as we are closing in towards that the result season, of course we are seeing a bit of jitteriness playing out. Now the expectation broadly is that like Q1, Q2 will also be a muted quarter, but the focus, I think, this time around, more than the numbers, will be on the commentary coming out from the management and the guidance coming out. As far as what the demand outlook is looking like from Europe and the BFSI sector in the North America. Another factor to track will be, what kind of recoveries are they expecting in the lead up in the second half of the financial year. Another, the deal wins. One of the things that in Q1 we saw that a lot of companies were had said that they had cut down the guidance. We saw Infosys significantly reduce their guidance, and in fact in the last 3 months in the previous quarter we have seen some good deal wins by these IT companies, some mega deal wins which are above 500
billions of dollars
worth of deals.
Aamar, IT pack is under pressure, quote unquote washout year is what some analysts at JP Morgan have said. Lots of doubts and fears about the current financial year, with hopes of a proper rebound in the next financial year. How does one approach the IT pack as an investor in the time being, because of the news flow? Look at the kind of deals that they've struck in a so-called muted quarter. They're striking multi-billion-dollar deals. How as an investor are you supposed to approach the IT pack?
I would say that looking at the IT pack, if we see there are some sectors which will give decent returns, IT is definitely one of those sectors. Now, again, what happens here is that in the sectors, because IT is so much of an evolving area and so much of technology advancement taking place, so the companies which would be able to capitalize more on the AI, on the machine learning, on the advanced technologies which are being there, and they are able to serve their clients, they would stand in a better state. But overall, I would say IT is a sector definitely one can look at. You look at L&T Technology Services. That's one. The stock is, in spite of a significant correction earlier, the stock is trading close to, it's not exactly record highs, but significantly higher. If you look at Wipro on the other side, it's significantly at a discount to its all-time high of 700, around 420 or so right now. If I look at Infosys again is trading at some discount to its all-time highs. So what it tells me is that these are sectors, and among the sectors you have to look at least some companies which are there, and in terms of size, which will give you decent returns. So you should definitely have a couple of IT stocks in your portfolio, no doubt.
Now, in the top 3 companies, TCS, Infosys, and HCL Tech, which company do you expect to outperform in this particular sector?
Yeah, if you ask me, so TCS looks promising. Amongst the 3, TCS is one stock one can definitely look at. It has rallied, and if you look at the stock also, the stock has is not very far from its all-time highs. So, but on any significant correction, this is one stock one can definitely look at having.
All right, so clear winner he's picked out, Amar. Amar is talking about TCS being the winner, the one to have a good time amidst so-called bad times for the IT pack per se. But Suyash, one is are the sectors that we're talking about. I think we've fairly covered all the sectors that we were discussing. It's time now to get into the stocks, that moved markets today and the news that moved these stocks as well. Suyash, if you can tell us.
Yes, so among the top gainers in the Nifty pack, Krishna, today was, Hero Motocorp. Now, there was no specific news trigger, but we have seen that the stock has faced a fair bit of pressure lately because, there was a FIR filed by the Delhi police against the chairman Pawan Munjal. Also, there was a ED raid that happened in August. So, the stock has seen some sort of a pressure, but in the last couple of days, we have seen a decent bit of a, a pullback rally of sorts playing out in the stock where it has actually, gained back about 4 to 5% in a matter of 2 sessions. In fact, today also the stock gained about 4%. Another stock was Grasim. Now, the stock has been in the news lately. One of the reasons why we have seen a good run up in Grasim is that the company is looking to foray into the paints business, by the end of fourth quarter. But again, the stock has been on a 2-day winning run. It has also gained about 5 to 6% in the last 2 days. Wipro also was in the news today. Now, Wipro has picked up a 9.5% stake in renewable energy company FPEL Ujjwal for a consideration of about 6 crore rupees. Now, the idea is Wipro is saying that the reason that it bought the stake was that it wants to, enhance the use of renewable energy in its operations, and this acquisition will help it achieve that goal of becoming net zero by 2040. Ultratech Cement also saw a fair bit of run up. It was up about 2% today. Now, there are reports that Aditya Birla Group maybe competing with JSW Group for acquisition of Heidelberg Cement. So I think that's why we are seeing a fair bit of run up. Reliance also, amid a rally in a lot of heavyweights, we have seen a good pullback in Reliance Industries stock. Now, among the losers, Krishna, if you see the losers, 3 of the 5 stocks come from the IT space, and that gives us cues that investors are waiting and booking profits ahead of the earnings because they expect some sort of a negative news as far as commentary is expected because of this higher rate for longer narrative that is playing out in the US. TCS, which on Monday had hit a 52-week high, saw some bit of a correction ahead of its results. HCL Tech was the top loser. It fell about 1.5% or so. It comes out with its results tomorrow. LTI Mindtree was another one which fell over 0.5%. Apart from the tech stocks, Coal India also saw a fair bit of profit booking. The stock corrected by about 0.6%. Now, yesterday the stock had broken past the 300 levels for the first time in probably around 4 years or so. So a good bit of run up Coal India has seen. So perhaps we are seeing some bit of profit booking taking place. And SBI was one of the stocks that saw muted action today amid a muted day for the PSU Banks.
I was just about to say SBI following in line with the PSU Bank stock pack for the day. IT, incidentally, Suyash, one of the top gainers, which is Wipro, and 2 of the top losers for the day. So talk about a mixed bag as far as the IT pack is concerned. I'm still surprised that the buying of a renewable energy company is what pushed the Wipro stock up, and Wipro's ambitions to be a net zero carbon emission company is being given a thumbs up by investors on the street. Fascinating, absolutely. So top losers over there. Amar, before we let go of you, I want to understand, tell us, any stocks that stand out for you, any stocks from these top losers that you think people should stay away from or be cautious about if, they are looking to buy?
So I would say that amongst the IT pack, if I look at TCS, as I earlier talked about, that's one stock one can look at. And also on any correction, if you look at one stock I'd like to talk about is Sun Pharma. This is one stock from the pharma space, which looks, I would say, promising from a long-term perspective. So on any significant correction, this is one stock one can definitely look at adding.
Now, Amar, I just want to squeeze in one final question. We had some news coming in about Vedanta. Now, Vedanta has taken its first steps towards demerging its business into several listed entities. Now, the company has decided to incorporate base metals unit, which will be called Vedanta Base Metals, for a authorized share capital of about 1 lakh crore rupees. Now, base metals as a whole contributed to around 5% or so, in the FY23 revenue, and the stock has seen a good run up in the last 10 days or so. In fact, since September 29, the stock is up about 10%. So, Amar, my question is simple. Do you think that the value unlocking exercise that the Vedanta group was banking on, has it already been priced in, or can we expect some more upside from Vedanta?
And if I can add to that, that entire process of demerging into other listed entities, so many questions over it because the kind of debt burden that Vedanta has on its books. So, if you can tell us, put together, how do you see the Vedanta stock's performance so far and the way forward as well?
Yeah, looking at Vedanta, what we see is that the company is definitely trying to diversify because it's into different sectors, into mining, into infra, into metals. So it's demerging all these different businesses. That's one major agenda, and also what the company is of the view that demerging would give them more leverage in the sense that they'd be able to manage the companies better, and also that would give investors a better opportunity or a choice as to which sector or which segment they want to invest in. Apart from that, that would also, what the Vedanta management is of the view that would also help them manage their debt burden differently, because that would be then across the different companies. Looking at the value which would emanate, which would come forward, that's definitely a big question as to how that will play out, because that would again depend upon the management as to how they steer the organizations, because and we have to remember that these companies are primarily all cyclical in nature. So you'll see that there'll be major ups, there'll be downs, and also these are highly capital intensive sectors. So how these companies are able to manage their debt, that's definitely going to be an important issue, interesting thing. But at the same time, Vedanta has corrected significantly post this announcement. Currently, it's around 227, has bounced back recently. So I would say that we'll have to give it time before it really comes out as to how these companies are well managed, because then only the value would be created.
All right, fair enough. Aamar Deo Singh over there, putting into perspective as to what's going on with Vedanta. Talking about all these stocks, how can we not talk about one particular stock which was also a loser in the day's trading session, Suyash, and that stock that I want to talk about is the Bank of Baroda stock. So tell us, how has the Bank of Baroda stock been so far until the big news hit of RBI's crackdown on Bank of Baroda, which clearly the markets took very seriously?
Yes, Krishna, we saw a 3% fall in the stock of Bank of Baroda, of course, on the back of the news that came out yesterday after the market hours. So market did not have any time to react to the news yesterday, but we saw a fair bit of correction playing out in the stock. It in fact fell about 4% on an intraday basis. Some bit of recovery we have seen since then. But I mean, if you look at the Bank of Baroda stock vis-a-vis the Nifty banking pack, it has underperformed. In the rally that we had seen playing out in the PSU banking pack, two banks which are the largest bank in the pack underperform, SBI and Bank of Baroda. On a year-to-date basis, Bank of Baroda is up about 11%, whereas the Nifty PSU banking index is up about 20%. In the FY24, the banking pack, Nifty bank index, PSU bank index is up about 40%. Bank of Baroda is up about 22%. So clearly, Bank of Baroda has been an underperformer relative, but yesterday's news was a major dampener for the stock, and we have seen a 3% correction in the stock prices.
Okay, not doing well, further push down. To understand the Bank of Baroda mess better, who better than my friend and colleague Karthik Malhotra, who joins us in the studio. Karthik, please join us here, because this mess at the Bank of Baroda, a huge public sector bank, a very trusted public sector bank for a very long time. This is not the kind of news that we would want to, we've come to expect from Bank of Baroda. The app, the full concentration is on the BOB World or Bank of Baroda World app and the problems with it. Take us inside the Bank of Baroda mess, Karthik.
Right, Krishna. Hi, thanks for having me here. Hi, Sayash. I think, what happened yesterday was RBI coming out and issuing this directive to Bank of Baroda that, hey, don't onboard any more customers on your BOB World app starting today with immediate effect. Now, BOB obviously complied, and there was a reply that BOB issued, not a reply, in fact, a filing, with the market regulator saying that it is complying with the RBI's directive and has stopped onboarding customers. But what is this whole issue really about? And it seems both BOB and RBI have been silent on this directive and the reason behind this directive, but it seems that this is directly linked to the July 2023 report filed by Al Jazeera, citing an example of a Bhopal Zone Bank of Baroda branch, where Bank of Baroda employees were using fake phone numbers, linking them with real bank accounts, installing apps, logging in using those fake phone numbers, and then delinking the mobile number with the bank account. Now, why was this really happening? This was happening because Bank of Baroda had given marketing targets, customer onboarding targets to all its employees. What were the targets? The targets were a couple of hundred, running up to 150 new registrations on the BOB World by existing customers. Now, how do salespeople typically react? They try to find a way around it. So they say, okay, it's impossible because we can't be making so many phone calls and really convincing people to come on board and go ahead and download the app and make sure that they do it. They might say yes to me and hang up on the phone, but whether they do it or not, we don't know. So what they really started doing was start using phone numbers of family and friends, link those phone numbers with existing customers. Once the OTP comes, log into the app, and then in the back end, delete that number, use the same number, add it to another customer, and repeat it until your targets are met. And this got reported in the month of July. Bank of Baroda back then said that we haven't done any wrongdoing, denied this report completely. But now it is saying in reply to the RBI directive that corrective measures are already in place and it is complying with RBI's directive. So if the two are linked, it means Bank of Baroda is definitely now telling its customers that there was indeed wrongdoing and denying what it had previously perhaps incorrectly stated.
Okay, then. So, one way or the other, Karthik, at the end of this, from what I understand, I think the way forward is that the corrective action can now be officially taken. Now, the bank has admitted to the fact that things are not all going right with the BOB
if it is
mess.
used the word corrective measures are being taken, then obviously something was broken, which is now getting fixed.
Okay, so the good news is that what was broken is getting fixed at Bank of Baroda. But Suyash was telling us, Suyash, do you think the stock will recover tomorrow?
I mean, that's anyone's guess, right? Because, see, bank is saying corrective measures are being taken, like that's the bank's side of things, RBI will assess the situation as well. And we'll hear more about that. But the situation remains, to be unfolded.
But I think just one word of has also said in the same breath that existing customers, existing users of the BOB World, their services are going to be uninterrupted and there's absolutely no glitch when it comes to existing real customers using real phone numbers and banking using the BOB World app.
Very important, very important. As you try to crack down on those misusing the system, it's important that those in the system correctly can continue their lives as usual. That's the confirmation coming from Bank of Baroda. We leave Bank of Baroda for a bit and all these stocks that we're talking about eventually become part of something that many more of us who don't invest directly in the stock markets, we need to understand these stocks better because we invest in something called as mutual funds. And mutual funds are directly related to markets, as we all know, and related to stocks and sectors that they're invested in. And we have some very important piece of news that we want to give you. As we discuss the markets every day, but we don't often tell you how many people invest in mutual funds in this country. And now we understand with the latest data coming out that SIPs, or the systematic investment plans through which we all invest small sums of money on a monthly basis, which has become the most attractive form of financial investment, if I may, in these extremely volatile times that we live in. SIPs, a crucial investment avenue, and SIP investments in India are at all-time record highs. in between all this volatility, all these issues, muted markets, muted IT pack, one thing that is not muted, investments, inflows into mutual funds, and specifically not the bulk mutual funds, but the systematic investment plan investments into those mutual funds. To help understand what exactly is going on over here, I have Karthik staying on with me. Karthik, please stay back. We also have Mr. Feroze Azeez, Deputy CEO, Anand Rathi Private Wealth Management, also joining us live on this broadcast. Feroze, thank you so much. As always, joy and a pleasure to have you here on the show. Look at those numbers, 16,000 odd crore rupees SIP inflows at record highs. This is for the month of September. If you can tell us, the first question on my mind is this: overall mutual fund inflows has gone down from August to September, but SIPs alone have gone up. So are you looking at a definitive shift in the way Indians are investing into mutual funds? Are they all overwhelmingly choosing the SIP route over bulk investments in mutual funds?
Yes, so there has been a 26% rise in the SIP number from the last 1 year perspective. See, what happens is when it looks at mutual fund as an investment, monthly numbers don't give us a trend. Because there could be outflows from HNIs which can skew the entire country's inflows and outflows. For example, in August, we saw 20,000 crores of inflow, which implies that 15,800 odd crores came from SIP. So lump sum investments were 4,200 crores, summing it up to 20,000 crores. Now this month we see the SIP number is greater than the total inflow, which implies that the lump sum monies went out to the extent of about 1,500, 2,000 crores. So every month-to-month basis, they don't speak so much, but at least the number which you pointed out, which is the SIP number, clearly stands out and shows a trend of a 26% growth in the last 1 year when it comes to money collection. I had actually predicted that it will reach 25,000 crores by FY26 end. I think that's going to happen sooner. You would be very surprised to know this number was just 800 crores per month in 2011. So we have come a long way. I think financialization, which as a concept we are speaking about, has not happened as much, but this subsequent decade, if I threw some numbers, Indian mutual fund has a total proportion of the Indian household savings, which is 670 lakh crore. Indian equity mutual fund is just about 4%. So financialization is not behind us, but ahead of us. And I think the next decade is going to be a paradigm shift in those proportions.
Absolutely. The one thing I want to ask you is that amongst all funds, we understand that the ETFs, the export traded funds, rallied the most in terms of inflows, up around 74%, if I'm not mistaken. Clearly, there is, are you looking at people choosing export traded funds over other kinds of funds?
So exchange traded funds have a large inflow. In exchange traded funds, largely ETFs are going to be driven by large corporate monies as well. Now, if you look at the largest investor in the ETFs, especially Nifty and Sensex, is the EPFO, Employee Provident Fund. So those numbers are going to be lopsided this way or that way. That does not represent the Indian individual investors' numbers so clearly, point one. Point two, seeing the inflows and outflows as a proportion of the last month's inflows and outflows could be a little misleading. Now, for example, on the large cap fund side, the number went up 68%. But if you look at, there was a minus 300 crores outflow in September from large cap. Now there's a 110 crore outflow in the month of September. Both are outflows, but there's a 68% betterment. So I think seeing it as a proportion of the last month's inflow outflow could be a little deceiving, but you're absolutely right. There is been some degree of attraction of even individual investors to save cost and get into ETFs and not trust the fund manager, but use a passive strategy, which is what ETFs do. But yeah, very, very clear trend. But these numbers could be largely driven by large corporates or even EPF for that matter.
Hey Feroze, nice to see you after a very long time, and I hope we see you a little more often like we used to earlier. But thanks for joining us here today. I just wanted to understand from you, I mean, of course, big numbers there, and we are seeing massive 16,000 crore rupees worth of SIP investments. We are seeing the unique investors taking the mutual fund route of investments. touching 4 crore. 4 crore unique Indians are actually in the mutual fund, investment zone right now. But Feroze, my question to you really is that do you really attribute the 62,000 odd crores of AUM wipe off only to HNIs, or are we looking at Q1 selling and maybe that money being diverted to either bonds or other safer banking units, banking instruments, given the fact that there is volatility in the markets right now?
Or even gold for that matter.
Yeah.
Yes, if you look at it, I think generally this number, when you look at the total inflow, X the SIP number has been a very volatile number. And it has not been a trending number. Like this month, it is negative lump sum. And last month, it was 4,500 positive lump sum.
Yeah, but it comes at a time that we are ending H1, and it seems like an opportune time for corporates also end of quarter, end of H1 to really look at readjusting their portfolio and parking money, because I don't think regular retail investors like us calculate it that way.
Absolutely, Karthik. I think you're so bang on. Individual investors don't think like that. Corporates can. But having said which, I think flight of capital to gold and debt. Debt, I think, especially on the mutual fund industry size, like you said, there are close to 4 crore equity fund investors. There are just about 57-60 lakh debt fund investors. So debt funds have very little money of individual Indian investor.
Right.
Today we have 133 crore Aadhaar cards. We have 65 crore smartphones. We have 50 crores of people using health insurance and UPIs, but we have only 4 crore mutual fund investors. So I think we have a long way to go in terms of penetration. Even on a e-commerce, we have 60 odd crore people shopping online. So.
Fair enough, Feroze.
So
Okay. The numbers don't tell us that, like, we need, with better penetration, we'll be able to get a better sense of the inflows into mutual funds as to which one is really a reflection of the common Indian investing into mutual
Krishna,
funds.
I'm very curious about one thing, and since Feroze mentioned don't look at data month on month, look at the trend line. If you look at the trend line, let's say April onwards, this entire first 6 months of the year, Feroze, we've seen that the outflow has largely been on account of large cap funds. I thought large cap funds, again, I mean, it seems counterintuitive. Large cap funds seem to be safer. The blue chips fall in large cap funds. They're just bigger brands that you know of, bigger companies that you know of. But April onwards, we've been seeing the large caps have been seeing outflows. But small and mid caps, while month on month they've declined, overall April onwards, we've still seen them in the positive territory.
And if I might add, I was talking about the ETF exchange traded funds, growing up by 74%. Look at the growth in hybrid funds. So there is a movement in a particular direction, even when they want to come to the mutual fund arena to invest, isn't it?
Yes. What has happened is, of course, we had given a buy call on small caps on 2nd January this year. There's been about 29% outperformance after that of the small cap Nifty small cap 250 index with respect to Nifty, which is a super normal outperformance. We last saw this kind of outperformance way back in 2017. The good part is the retail investors have invested in small cap thanks to the education which has happened over the last few years, especially post-COVID. We saw 7,000-8,000 crores come into small cap in February, March, if I remember right. That's the first time I have seen retail investor being ahead of the curve. I've always noticed over the last 18 years of my career looking at this data, retail investor is the last man standing. But this is the first time I saw retail investor through the mutual fund route enter small cap much before the full rally happened. And still the outperformance continues till today. So point one. Point two, large caps have had an exit. But if you try and marry that with data of how flexi caps have got money, which is also largely large cap, 80%, 70% of flexi cap funds have large stocks. What has been disappointing in the mutual fund categories specifically is large cap as a category has not been able to deliver alpha. But a flexi cap category or a multi-cap category, which is skewed towards large cap, is able to generate that alpha without being labeled a large cap. I think that's one thing which has been a huge shift of capital.
Cool. That helps us understand it better. Flexi and hybrid funds, because movement away from large cap funds going into flexi.
It's all about the alpha.
It's all about the alpha. But Feroze Azeez, thank you so much for taking time out to share that piece of wisdom with us this afternoon here on Business Plus. Always a pleasure to have you, and keep and we hope to keep having you again and again. But thank you so much for taking time out. And before we wrap this show up, we have something very important to quickly tell you, and that is the Richie Rich of India, Hurun Rich List 2023 is out as an important story coming out from that rich list. Ambani greater than Adani, and that is because Ambani is now, Mukesh Ambani and family is now number 1 on Hurun Rich List 2023 with a total wealth of over 800,000 crore rupees, 8 lakh crore rupees, so to speak. Number 2 is Gautam Adani with much less, 4,74,800 crore rupees. Huge wealth reduction thanks to Hindenburg by much, but the highest wealth fall for Adani ever, for a billionaire ever. Now you have Cyrus Poonawalla number 3, 278,500. You have HCL at number 4, Shiv Nadar and family, 228,900 crore rupees. That's, ladies and gentlemen, Gopi Chand Hinduja and family, the Hinduja group, 176,500. This is the top 5. And then you have number 6, Dilip Shangvi and family of Sun Pharmaceuticals, worth 164,300 crore rupees. And of course, Lakshmi Mittal and family of Vasalal Mittal, 162,300 crore rupees. RK Damani and family, Avenue Supermarket, 143,900 crore rupees. And Kumar Mangalam Birla and family of Aditya Birla Group, 125,600 crore rupees. And finally, rounding up the top 10, Neeraj Bajaj and family of Bajaj Auto with a total wealth of 120,700 crore rupees. That's the top 10 Richie Rich of India according to the Hurun Rich List. And with that, we've completely run out of time here. I'm going to thank Karthik and Suyash for being with us. And it's a wrap here from my side. This is Krishna Kumar signing off. Keep it with News 9.
China won't let us rest easy on our borders, but they will keep flooding our market.